Good morning and welcome to BloombergQuint, India's first digital live streaming business news service. I'm Neeraj Shah and you're watching Indian Open. Let's go straight to the headlines. Boris Johnson has a tough task on hand as he tries to get the British Parliament to approve his new Brexit deal on Saturday, with the Democratic Unionist Party opposing the deal. A group of secretaries will meet today to consider bringing down the government's stake below 51% in at least 8 public sector companies. That is a BloombergQuint exclusive. Domestic air passenger traffic grows only 1% in September, according to data from the Directorate General of Civil Aviation. Zee Entertainment second quarter net profit misses analysts' estimates as it provides for loans extended to related parties. Cash flows have fallen while receivables have risen. And Reliance Industries will be the only Nifty company set to report its second quarter numbers today. But boy, we are in for an earnings showdown for the next few days, simply because Reliance comes out post-market hours today and next week is full of earnings. However, what is this week looking like? Very quickly, let's take a look at the trade setup for the day. The US markets were led predominantly by earnings. So earnings-led moves that we saw in the US markets. So good start. You could have argued that the UK markets could also have done better, because when we shut shop, remember, UK markets are doing much better on that hope of the Brexit deal. But somehow, post that, because the UK lawmakers cast out on the deal, the markets came off. FTSE marginally in the green, but the others ended in the red. When we shut shop yesterday, DAX was up nearly 1%. That tells you the extent of the pullback. US markets, led by earnings, did reasonably okay, but you have to argue now that the S&P 500, much as we keep on seeing it move higher, is finding a bit of a roadblock at this 3,000 odd level. That tells you the number of times in the last few months that the S&P 500 has knocked on the doors of 3,000, maybe gone slightly over and then retreated. So let's see if we are hitting a point of a bit of a glass ceiling. Asia today, a mixed bag. Nikkei is on a roll, really. It's doing well for the last few days now. The other markets flattish in the session. SGX Nifty indicating a start, which is probably about 0.25% lower in trade. Now, we've seen a very strong rally for the last 2 days and buying on dips, and one wonders whether the near-term run rate might just see a bit of exhaustion, and could a near-term pullback be possible? It's not very unlikely to my mind. Let's wait and watch. But the risk appetite is certainly returning, and it's evident in the way we've seen buying in some of the NBFCs. Look at what happened yesterday. Edelweiss up 4% after an 8% rally the previous day. Piramal Enterprises up 7%. Indiabulls Housing up 15%. This smacks of some bit of risk appetite returning. Let's wait and watch if these rallies continues. The delivery-based percentages were very low, but there is some trading buying happening in these names. And frankly, while there have been an odd slip or two, broadly the numbers that I remember, the standout numbers that matter, have largely been better than what the street was working at. TVS a case in point, PVR did not disappoint, Wipro came out with good numbers. So let's wait and watch if indeed the earnings season turns out better than the fears that the street had. Speaking of earnings, today it's only Reliance Industries, as our headline stated, coming out with numbers, but few interesting mid-cap names or non-Nifty names, let me put it that way. ICICI Lombard, L&T Finance Holdings, Ambuja Cement, and after what ACC has done, Ambuja would also be in focus. So let's wait and watch what happens to some of these earnings. However, the stocks that you should watch out for in the session today, firstly in terms of results announced, and I'll talk about this in detail on Zee Entertainment, but just to give you a snapshot of, because it's a stock to monitor, results were in line with estimates and there was a PAT miss due to an exceptional loss, but operating cash flow turned negative, and the cash flow has not been reviewed by the auditor. Even September 2018 statements not reviewed, as he had not signed off. Keep that in mind. So Zee might be a very interesting stock to monitor in the session today. Bank of America, Merrill Lynch and JP Morgan and MK have cut the target prices, while CLSA has raised the target of Zee Entertainment. So let's wait and watch this stock. A small cap name, Jai Bharat Maruti, revenues down 25%. Net profit collapses 76%. EBITDA was down about 38%. Not the best of quarters. Let's see what happens here. DHFL, again, not the best of quarters. The net loss of 215 crores versus a net profit of 429 crores the last time. NII 2 down. It's a 20 rupee stock, but might correct. And aviation and Interglobe Aviation in particular would be a stock in focus as well, because the air passenger traffic growth is the lowest in number of months, 22 months to be precise. Let's tell you what's lined up on First Word today, though. The big news of yesterday, and arguably the news for the next few days, the new Brexit deal. It's a snag as soon as it was done. We'll get you some reports around that and some conversations around this as well. And we'll talk to Vedanta's Anil Agarwal as well as Professor Bhala about what Brexit means for Indian businesses. Then we shift focus to the domestic market and take a deep dive into Zee's financials. And lastly, a group of secretaries will take a call on divestment in at least 8 PSUs. Nikunjori will get us that big exclusive.
We have a deal.
This deal represents a very good deal both for the EU and for the UK.
This is a fair, a balanced agreement.
A deal is always better than no deal.
We have delivered, and we have delivered together.
I think everybody should be convinced that the deal is the best.
That the Irish Prime Minister is content with this is also a very important sign for me.
It's up to the members of the House of Commons now to decide whether they want a deal.
This is your Prime Minister to deliver now a vote at your Parliament.
I hope very much now, speaking of elected representatives, that my fellow MPs in Westminster do now come together to get Brexit done.
Yes, UK Prime Minister Boris Johnson arrived at a new Brexit deal with the European Union, but it ran into trouble at home immediately as his Irish allies in Parliament said they would not support it. Bloomberg's Anna Edwards, who was in Brussels covering the negotiations, has this report.
Boris Johnson here in Brussels has managed to get agreement with the EU27 on a Brexit deal. But remember, we've been here before. Theresa May 3 times put her Brexit deal to Parliament and 3 times it was rejected. So he's done this part of the Brexit process. He's managed to get an agreement. It differs from Theresa May's deal in some important areas. It differs around Northern Ireland and in some ways that the DUP, the party in Northern Ireland that props up his government, in some ways that they don't like. So this plan from Boris Johnson is not going to have the support of the DUP, which is important, and more on that in just a moment. It also differs from Theresa May's deal because the future relationship that's been negotiated here is a more distant one, a less connected one with the EU than was envisaged by Theresa May and her government. So now we get to the bit that happens at the weekend where this deal will go to Parliament. And so over the next hours and days, we're going to be counting the votes on either side. Will Boris Johnson manage to make it to the magic number? 650 MPs sit in the House of Commons, but 320 is the magic number for him to get to. If he manages to secure the support of 320 MPs, then he's able to get his deal over the line, and Brexit is still possible by the 31st of October. Without the DUP support, though, that could be difficult. Every single vote will matter, and he'll be working hard to try and maintain both sides of his Conservative Party and to win votes also from other parties. Anna Edwards, Bloomberg News, Brussels.
So what does this mean for Indian businesses operating in the region? To understand that, let's welcome on the show Anil Agarwal, Executive Chairman at Vedanta, and Professor Bhala, who's a professor at Kansas University School of Law. Gentlemen, both of you, thank you so much for joining in. You know, I would have wanted to know about what would it mean for businesses, but Mr. Agarwal, let me start off with you trying to make a prediction. Will we actually see Brexit occur? Because immediately, almost immediately, it's run into a snag.
Yeah, it's a positive development. You know, he's a leader. He has come up, and I really appreciate that he has taken an initiative. I know, but leader means they have to take lead, and it's a very positive, good development. And let's see how they rectified between EU and UK. And once that is done, I think things are going positive, and hopefully. If that happens, I can tell you a lot of uncertainty will go away and business will definitely improve. The UK has a tremendous potential. From India, we have a largest investment in UK. So this is, we all are looking forward. No matter what has happened, we stick to UK. We have all our business, other Indian company business, they still remain at UK. So we have a great faith in UK, and I hope UK and EU can take it forward as he started and finish it. So that will definitely create a world club in the world. The certainty will come, and the business will definitely improve.
Well, so it's a valid point that the uncertainty goes out of the way. But just before I get back to Mr. Agarwal on how does he see the road ahead, Professor Raj Bhala is also in this conversation all the way from the US. And Professor Bhala, do you believe that what is the probability of Brexit actually going through in the first place? Because it's almost hit a snag almost immediately.
Good morning. It's a pleasure to be with you. The probability of Brexit going through a parliamentary vote coming up in the next few days, I think is very slim. At best, it's 50-50. The Tories are at least 30, or the Prime Minister's at least 33 votes short, assuming he can hold his coalition together. He's not getting the 10 votes from the DUP, and he's not likely to pick up a lot of Labour votes. So I think it's very difficult. It's an uphill struggle for him. And I would offer a very different perspective. I would say that this is a disaster for the United Kingdom, this current deal as it's written. And it is very bad for Indian businesses if they are continuing to think about the UK as their lead entree into the European Union. And we can explore why I say that. But I think this is not a good deal. It raises costs and uncertainty for Indian businesses.
So because we don't know your points, I wouldn't ask Mr. Agarwal to comment on that upfront. Professor Bhala, would you want to elaborate a bit? And then maybe I can ask Mr. Agarwal, because he's got business interests spanning across the globe and he might be able to give a business perspective too. But why do you think that this will be a disaster?
Well, Britain is partitioning itself twice. It's partitioning itself from the European Union, and it's partitioning itself from itself by creating a nearly unprecedented border between England, Wales, Scotland on the one hand, and Northern Ireland on the other hand. So put yourself in the position specifically of an Indian exporter exporting Indian origin goods made in India from India to the United Kingdom, that is England, Scotland, Wales, or Northern Ireland. No longer will Indian businesses have duty-free access to the entire European Union market by exporting to the UK. If those goods post-Brexit stay in the UK, they will pay a UK tariff. We don't know what that UK tariff will be because the UK doesn't have a separate tariff schedule from the European Union yet. It currently is operating under the European Union's common external tariff. So that's one uncertainty right there. What price will Indian exporters have to pay in terms of a tariff if the goods are going straight into the UK and staying there? Now let's say the goods are going from India to the UK and then to Northern Ireland. Any goods that are considered at risk, that is at risk of going from Northern Ireland onwards to the Republic of Ireland, will be subject to additional customs checks, either in mainland Britain or at ports of entry in Northern Ireland. So there's yet another problem for Indian businesses. They're going to have additional customs checks if their goods are going on to Northern Ireland, because those goods might be at risk of then going on into the Republic of Ireland, and they're not entitled to European Union duty-free treatment. So basically, Indian businesses have to plan for where their goods might be going. They have to look at different tariff schedules in the UK and the EU. They also have to look for different product standards, that is technical standards and sanitary and phytosanitary standards in the UK versus the EU. This affects every type of product, whether it's autos and auto parts or coffees and mangoes coming out of India into the UK, Northern Ireland, and then possibly the Republic of Ireland. I think this is for that, and this uncertainty is going to go on for at least 1 year. That is the 1st of November 2019 until 31 December 2020, right, when we hope the UK will have sorted out the mess that it's gotten itself into with the EU.
Well, okay. Now, let's try and get Mr. Agarwal's perspective. Mr. Agarwal, as somebody who looks at businesses who are exporting into UK and the EU, and somebody who's got business interests spanning across, how would you read? We don't know if Brexit is going to go through or no, but let's work with both the assumptions. And assuming that Brexit does go through, what are the challenges? What are the positives, sir?
See, I live here and in the UK, and one thing I can tell you, UK has a very different situation. The UK, one is of course the physical trade, and apart from that, it is a ground where huge transactions happen for the equity, debt, arbitration, various deals which being made. If you see, UK is the hub for the Middle Eastern, for the Asians, for the African. So this is, and so once this is rectified, we will come to know the detail. There will be definitely some lose, some win, but majorly once this done, I can tell you UK has a tremendous potential. We have, as I said, that we have the largest investment in UK, and by and large, none of them, we had a lot of concern, but none of them has shaken. They are waiting for this thing to complete. It is too early to talk about the full detail because the physical, according to me, maybe 25-30%. Other things are the big transactions which take place there in terms of financing, in terms of debt equity, in terms of arbitration. It is the place where the lot of comfort is there. So UK will have very strong position. What I like about the Boris is he has taken initiative. It's a very first step. At least somebody is moving in the first step. Because of he has taken a first step, the whole everybody has woken up and everybody says somebody is for it, somebody is not for it. Give few more days, give for few days. I have a lot of confidence this gentleman. We know him well. We have seen him. He is a kind of personality, and you've seen how the Queen has in the Parliament given a speech fully supporting him. So I wish them all the best at this point of time, going in the detail without we know the full detail what's going on.
Okay. Sir, can I ask you a follow-up though? Would it be fair to assume that if indeed a Brexit deal is reached and there is a separation, would Indian companies, exporters, or for that matter any other nation's exporters, will they, which now hitherto were using one supply chain for the entire region, set up two separate supply chains, and those headaches and some of the things that Professor Bhala spoke about as well, will that have teething problems for exporters or for almost any country, including India?
I fully appreciate Mr. Bhala. He's very concerned. He's very knowledgeable. He has gone in detail. I have not gone in detail, and he has a very valid point. That the physical export will have to be addressed. I'm very optimistic, but I'm definitely looking once for all. Something has come, something you are divorcing somebody, some dispute has come. Let's sort that out. Let's sort that out once for all. And I can tell you that they are putting all their effort. And one thing which he has done to push it hard. Let's look at the whole thing comes up. I know that there is as Mr. Bhala says, physical export. Let's see what happens. I don't want to comment unless we know full thing.
The full details.
But I'm very optimistic. What we are looking once for all, sort that out. It's been years which is going on. You know, yeah. Go ahead.
Yeah, Mr. Agarwal, I guess from your perspective, you are probably, if this deal goes through, of course, you would just be happy that there is a step taken. There is certainty about what the decision is, whether it's X or Y, but at least there is a certainty. That is something that you seem to be happy about.
Absolutely. Absolutely. Yeah, I'm definitely know for sure anything happen. Some people are definitely unhappy, and the UK government will find a very good solution. They are very accessible. They'll find a solution what to be sorted out. But I fully appreciate that there is a concern. But the major business in UK is transactional, and that will be going to grow very big way once Brexit happens.
It's always great having your views, Mr. Agarwal. Thank you so much for taking the time out and speaking to us at BloombergQuint this early in the morning.
Thank you. Thank you.
That's an important corporate voice, Mr. Anil Agarwal. Now, Professor Raj Bhala still with us, and one final question with him as well on this edition of First Word. Professor Bhala, well, obviously, you've gone through the mechanics of what could happen if a deal were to go through. I would ask you to maybe just for one ponder over the non-physical trade part as well, and whether that gets impacted materially. And part two, what I started off with, the possibility of Brexit in the first place, because it's hit a snag almost immediately.
Right. One certainty that it's a greater certainty than anything we know is that the European Union currently has free trade agreements and association agreements with dozens of countries, including with Canada. So services businesses, which your first point referred to, as well as merchandise exports, will benefit if they relocate from London or wherever they are in the United Kingdom to Dublin or Paris or Frankfurt and get the benefit of the EU free trade agreements. They will enjoy all those services trade liberalization provisions. You know, the probability of, let me give you another certainty, and that is that I think, like President Truman's Secretary of State, Dean Acheson, said when he said that Britain had lost an empire, not yet found a role in the world. Well, now Britain's not only lost an empire, but it's destroyed the role that it had into the world through the EU as a leading voice in the EU. Now, that gets to your second point. What's the probability of Parliament passing the deal? Perhaps the wisdom, the collective wisdom of the members of Parliament may see that their voice in the world, as frankly a power in decline since the Second World War, is much greater through the strength in numbers with the other 27 members of the European Union than it is alone. If they go it alone, they've got to negotiate free trade agreements with the Modi administration, the Trump administration, the Abe administration in Japan. Good luck with that. Whereas when they're with the EU, they've got an experienced set of trade negotiators. So perhaps Parliament will get past all of the rhetoric that we've seen over the last 2 or 3 years and really focus on what is the role that Parliament, on behalf of the British people, want for Britain in the next 50 to 100 years.
Yeah, well, pertinent points. You know, Professor Bhala, would have loved to dwell a bit on how a lot of people believe, maybe including you as well, that EU seems to be just so sick of UK, but we are so short of time. So I have to call it a day. But Professor Bhala, I look forward to reading some of the thoughts that you will undoubtedly put out for our readers on BloombergQuint.com as well.
You bet. Happy to do so.
Thank you so much for your time today.
Thank you. Have a great day.
That's Professor Raj Bhala. Would have loved to chat more with him about a lot of other factors, but we've done 22 minutes of Brexit. Let's talk about some of the other important things as well before we wrap up First Word. A group of secretaries will be meeting today to consider bringing down government stake below 51% in at least 8 companies. The list will be placed before the cabinet once a decision has been taken. Nico Jore reports on this BloombergQuint exclusive.
The core group of secretaries on disinvestment, headed by Cabinet Secretary, is going to meet today to consider a proposal of lowering government stake in about 8 public sector companies below 51%. These 8 public sector companies are Engineers India Limited, Indian Oil Corporation, NTPC, Bharat Electronics Limited, BMEL, MOIL and GAIL India Limited. Out of these 8 public sector companies, the government holds the lowest stake in Engineers India and Indian Oil Corporation of about little over 51%, and the highest in Bharat Electronics Limited, where the government holds around 55%. Post the CGD's approval, the final approval for this proposal will be given by the Cabinet Committee on Economic Affairs, headed by the Prime Minister. This is a step towards a government step towards meeting its divestment target of a little over 1 lakh crore rupees for the current financial year, at a time when the government has announced a huge corporate tax reduction, and the tax revenues in the first half of the current financial year have been disappointing. Besides this, the government has also sought transaction advisors for a few public sector companies where the government intends to strategically disinvest its stake, and in some of the companies it intends to transfer management control. These companies are BPCL, Concor, NIPCO, THDC and Shipping Corporation of India. And if these transactions in which transaction advisors have been sought go through in this particular financial year, the government would well exceed its divestment target. Over to you.
Back home, Zee Entertainment was the other big news flow. It came out with its second quarter earnings last evening. While the headline numbers were not as worrying, its fine print is what demands more attention. But the headline numbers, firstly, the revenues, consolidated revenues up about 7.4%, profit up about 6.9%, EBITDA about 4.5% or 4.7%. Margins expanded a little bit, about 33.1% versus 32.2%. And mind you, the subscription revenue, Darshan was speaking about this yesterday, the subscription revenue we knew would be strong, and that's about 19-20%, so that's okay. But the ad revenue growth has been abysmal. For a lot of companies, ad revenues have even declined. I mean, a lot of other media companies, so they've shown some growth, but this is what would have been a driver for Zee. Sadly, that is not the case. However, it's the other factors, as we said, which demand some attention, some points to ponder. Now, firstly, if you just look at what's happened to inventory and receivables, that's the big thing. Now, think about this. Inventory was up about 12%, and receivables from March 2019 levels were up 32%. Now, what did this do? This uptick in receivables led to an increase in working capital requirements, and the increased working capital requirements led to negative cash flow from operations. Negative cash flow from operations for a media company. That is quite something. Now, the negative CFO of about 246 crores in the first half versus a positive CFO, which is cash flow from operations, of about 303 crores in the first half of 19. Keep in mind, the management is saying that they are more confident of a positive cash flow from operations in FY21. They hope that they can do something in FY20 itself, but they're confident about this turning around only in FY21. The intercorporate deposit related losses was the other big thing that I thought stood out. Now, the company recorded an exceptional loss of about 171 crores in quarter 2 on the intercorporate deposits. Now, the exceptional loss was because of the provisioning of the 171 crores of the ICDs, the principal amount, which was, by the way, 150 crores, keep that in mind. They have seen delays in receiving the payment from related parties, and the management in the con call have said that the promoters have now stepped in to receive or recover these amounts. It needed the promoters to come in and try and recover some of the losses. The one point that Zee made, on which social media is agog with a bit of a to and fro, in the notes to accounts, there are some FD adjusted against dues remarks that Zee has made. They have said, of course, that they are seeking legal advice for appropriate action. But what happened was a fixed deposit of close to 200 crores was adjusted by a bank, name not known, against dues of certain related parties. Now, Zee is saying that the related parties have subsequently reimbursed the company, and therefore their claim seems to be that this was an action which was unilateral on the part of the bank and should have done. But there are enough and more pundits, and I confess ignorance about this, but there are a lot of people who are saying that banks are given the powers to do so as well. The management is saying, of course, they are seeking legal advice for appropriate action to be taken. But the question is, what is the nature of this transaction, and can more such things happen? And last but not the least, the straw on the camel's back to my mind was that the statement of cash flows is not signed by the auditors. The consolidated statement of cash flows for the half year ended September 30th, 2018. Remember, it's 2018, by the way, not 2019 as well, has not been subject to review or audit by auditors. And that's quite something as well. So auditors have left a note that they are not leaving a note, they have not signed off on this, and that is something that is also worried. Now, how this all shapes up is difficult to say. Will the street be worried about this? Very difficult to say. Most people have said that the weakening of the balance sheet adds to the overhang on Zee Entertainment, and this should be an issue that I think people would be worried about. Let's see if it reacts or if it matters to the stock in the session today. It had a bit of a short covering led move yesterday. Let's see if the market shows some concerns about the transactions and the deteriorating health of the balance sheet. Brokerages have gone out and downgraded this stock as well, save for CLSA, I think, which has maintained a stance, but the others have all gone out and cut the target prices to maybe, just maybe, Zee will see a slightly tough time. It's not had a great year. Let's see if it can manage to do well in the session today. Difficult to say that. That's all that we have on First Word today, but lots more lined up on Indian Open. We speak to Mahantesh Sabarad of SBI Cap Securities on the impact of the new possible Brexit deal on Indian companies, which are the stocks that it should matter. Alok Tandon of Inox Group will fill us in on the multiplex chain's plans and box office collections. And we speak to Rajiv Mehrotra of RITES on the company's order book and the outlook ahead. But after this break, a full tilt towards the day stream.